everybody? Welcome back to the Everyday Growth Advisor's pre-market live stream. I hope that you are having a good Monday. It is going to be a pretty intense stream today, so catch up if you can, and let's get straight into it. I don't want to waste any time. So very quickly, let's give a quick zoom out into where we have been and where we are going to. The start of this year, how it had been. We were entering past a bear market exit into a huge bull run. That bull run continued. Then we had some fears about interest rates here, where the 10-year inversion happened, and we've had a correction since then. And now when we zoom in into the current status quo, we are currently trying to break out from just all-time highs again. And we have been tapping up on this all-time high window multiple times in the past 1 month or so. In August, July to August is where we've been tapping on this zone. What is next week? It's going to be OPEX, but what is this week, more importantly, is FOMC. And I think we have heard about FOMC enough, where we follow it on the news, etc., etc. But what is the point of it all? The market is very, very skittish about whether the Fed is going to do a 50 basis point rate cut or a 25 basis point rate cut. Now, what is 50 basis points? 50 basis points simply means 0.5%, okay? And 25 basis point means 0.25%, okay? Now, remember, just very quickly, that if the Fed wants to affect the interest rate by these amounts, right, down by 0.5 or down by 0.25, it has to do so by controlling money supply, right? Money has to go out into the hands of people, right? And therefore, they have to buy bonds in order to do so. They buy bonds back from the banks that have bonds in the open market, and then cash comes out. That is the interaction. That's all you need to understand, okay, about today's pre-market. Now, once you understand this, you'll understand that once money comes out, right, and there's money in different kinds of markets right now. That's $6 trillion sitting in money markets, which is equivalent to cash markets, basically cash deposits or short-term bonds, right? And then you look at the NASDAQ and where we've been, right? Much stronger performance, but then also more volatile. You can see that in this past drop that happened, right? The NASDAQ moved down more aggressively than the S&P 500. And that's just one of the advantages of diversification and not being so heavy in tech on S&P 500. Now, the NASDAQ is currently almost breaking out of its cycle here, but in this next 2 days, we're going to find out if Powell's going to come out there and say we're doing a 25 basis point rate cut or a 50 basis point rate cut. Now, what does that mean for the market? It just means the sense of urgency. Number one, if the Fed decides to do a 50 basis point rate cut, what does that mean? That means that the Fed urgently wants to jumpstart the economy. This is outflow of more money at a faster rate, okay? If it's 25 basis rate cut, then the Fed is going to take a slower approach. That is what the market is not sure about right now. That's why you're getting a lot of back and forth price action, which I very strongly think will continue for a little while, until Wednesday at the very least. Okay, so I am not trying to speculate here, bearish or bullish. I do not need to speculate right here, because where we are is a death zone. People who bet bullish will easily get slapped down. People who bet bearish will easily be bought up. And they will play you in between this zone for as long as they can and take as much money as possible from you right before FOMC, so that you don't have any liquidity, and then drive the price into the direction that they want, okay? So I'm not talking like as though there's a army of ninjas out there waiting to steal your money, but I'm just saying, save yourself the mental fortitude and execute when you need to, not out of emotion. Don't speculate. This is not a week for speculation. Speculating weeks are when when the macro backdrop is more stable, right? This is not the time for that. Okay, moving into other things now. You have an idea of my thesis for SPX and NASDAQ, it's don't touch it till you see a confirmation. We'll have confirmations of that when we get into Wednesday's live stream. NASDAQ would have broken up or rejected by then, and then we will know more. With IWM, small caps, still squeezing as well. If you look at this in a 4-hour, it's actually kind of squeezing between a pennant, right? But I haven't, put that in there yet because it's just 2 touch points. Not a very strong pennant just yet. And then look at the US 10-year yield, right? This is the long-term weekly chart. The US 10-year yield here, doesn't it look like it's turning the corner, right? We're ready to go further down here. Now, this may lead to short-term spikes if the Fed decides for a 0.5% rate cut, right? Then 50 basis point, right? This will cause people to buy bonds in the short term because they'll be more uncertain. They'll be more certain in the future, and that will cause the 10-year yield to snap back. So I'm fully expecting the 10-year yield to come back at least to 4%, right? Before we get the actual move further down, eventually, after the Fed rates are priced in and we start to get more color on exactly how fast this is going to happen. So expect that to happen. This will take a bit of time. Dollar index as well. Can you see the super cycle here? Dollar spiked very high and now after lots of consolidation, entering a demand zone again, where if it breaks below, has a lot of room to go below, right? So I'm just giving you all the macro updates here. The VIX, quite okay. And let's talk about sectors now. So next up, as we discuss the granular, we just focused on big picture things. Let's also focus on the sectors. So my favorite sectors right now, XLY for a potential continuation. Okay, if it can break here, it's likely to go and rally all up to 213, 212. I've discussed this on a previous live stream, and I'm discussing it again. This is a continued opportunity. If we can get a 193 break, 194 break, 195 break, and then start bouncing on that level, I'm happy to take a long position here. If not, I'm happy to wait for a pullback to take a long position. But if that happens, I want to take it at 185 to 186, 187, around there. Energy, this is a big one. Energy looks like it's been consolidating, selling off for a little while, and now it might be ready for a bounce. The closing, now obviously there's more confirmation here to be had, but the closing candle as of last Friday was pretty nice. If you look at it, pretty strong bullish reversal pattern technically. So I like the risk to reward ratio as well, and then the snap pullback here as a corrective territory for this week. Let's see if it can perform. It needs to close above 86.25 and have some strong momentum to the upside. I'm happy to take that bounce there. And if XLE is bouncing, then I would lever that trade by playing XOM, or you can also play, Chevron. You can also play XOP, which is the oil and gas exploration. This one right here, which is actually nicer of a chart, right? You could do that. There are multiple ways you can play energy here. Next, Johnson & Johnson. Nice bounce so far. I covered this on Monday, last week's live stream as well. Pretty nice bounce. Healthcare has been strong, breaking out into all-time highs. You can see here, healthcare, right? Last week we had tried to come down here, and look at how quickly we got bought up with such aggressive candles. So something obviously makes me believe here that healthcare is going to continue to be a top performing sector. One of the beneficiaries will be J&J. I like trading in these kinds of patterns where you find out the biggest percentage holding in this ETF, and then you go find that trade that kind of aligns in terms of confluence in multiple ways. And then let's talk about everybody's favorite. I sent a newsletter out about this one, Tesla. October, remember, robo taxi event. As of right now, this looks like a beautiful chart pennant setup. Needs to break above the dual zone and start forming some support here. So needs to break up and bounce in this region. Then it can make a further move up. It has legs all the way up to 265, 270, somewhere there, if it breaks out strongly. If it rejects here, then we are looking for rejection confirmation, needs to break further higher, reject, and then it comes down, and that'll likely lead you to support, which is going to be at 203 to 209. So that's what I'm looking at for Tesla. Very straightforward plan here. Really don't need to overthink it. These setups, guys, when they come, you have to be able to execute to perfection here. Okay, there is no excuse for you not to execute to perfection. This is a beautiful setup. You have to at least take a paper trade to practice if you have never done that before. Okay, these are the kinds of setups you practice on. Very textbook, very easy, and pretty good success rate. Amazon, part of XLY, so I'll be looking at Amazon as well. 189 breakout or 189 bounce would be aggressive. What does that mean? Break out of here and bounce here, simply. And then looking for further upside after that. No breakout and bounce, no confirmation. If it rejects here, you're looking for consecutive lower highs, lower lows to confirm. Second bounce entry to the short side. Very simple, clear cut. And then you have NVDA. A lot of bullish flow behind this one. I'm saying, seriously, guys, a lot of bullish flow. I'm seeing unusual amount of flow on NVIDIA. I'm not sure what the news is about, but there was one day last week, look at this, right? Just non-stop. Look at the amount of NVIDIA that came in. NVIDIA, 1 million, February 121. NVIDIA, this is 1.1 million. Oh, this is the same trade. 1.22 million, February 118 calls. 1 million, again, 124 calls, February, all February bets. 117, 1.26 million, 117, 1.26 million, 1 million, 1.25 million, 1.23, another 1 million, another 1 million. Just count how many that is. That's already 10, 15 million right there, right? All of these down further. And then they will continue to buy repeat action. Look at that, 150 calls for 3.8 million, 2.65 million again. Again, along with that, Tesla calls came in as well, right? Google calls came in, NVIDIA calls, further NVIDIA calls. Look at all these, some more here, right? And this is just all of last week. Look, some more, one more, 1 million. And more down here, 135s for, 1 million again, 1 million here. Just a whole bunch of these, if you guys can see that. So I have conviction to believe that obviously there's a move coming. Now, typically, I'm not big on trying to guess when unusual options activity is going to play, but I will say that we already preemptively took this trade on our Discord last week, early last week. The moment I saw that multi-million-dollar flow come in, we were long. Lots of bullish flow on this long-term trade, and we took it for March. I wanted to give ourselves a bit more time to ease into this trade. I didn't want to have to worry about short-term moves. I'm moving more into very long-term swing trades right now, which I really much so prefer. I like building cases. I like trading cases. I like trading macro. That's where my strengths are. So, if you're happy with the macro backdrop kind of trade setups, then, I'm the right person you should ask, because, I'm trading this all the time. But that's where we entered, and that's where we are right now. So, about 40%, I would say 30-40%, and today it's down a little bit, so we'll see how much higher it gets, but I'm watching this very carefully. 122 is a line in the sand for me, and $99 is another line in the sand. So either break up here, bounce here, break further higher, or reject here, go down, retest 99, then if further 86. So those will be the levels at which I'll be looking to add positions or take off positions. And okay, now a little break from the charts. If you have tickers and you're tuning in, first of all, good morning. How are you doing, Jack? Sorry, I was getting into my momentum and trying to get all the charts away. But thank you for tuning into the live stream. Richard, what's up? Good morning, man. How are you guys doing? Jack, it's been a while since I heard from you. I hope you're doing good. And Richard, I hope you're doing good as well. Richard, thank you so much for the beautiful testimonial. I really appreciate it. The one-on-one mentorship with you was amazing. And I'm glad that it was helpful to you. So moving into just a little bit of more macro, just want to show you some backdrop stuff here. So have a look at the Mag 7 performance versus the S&P 500 index once again. I know it's like a broken tape recorder, but you know, owning just these 7 stocks will outperform the S&P 500. Now that is to say that you know, there are a mix of things that you can invest in, but what's the seasonality like for the S&P 500? So in a 2024 year to date is in green. Non-presidential presidential election cycle we are going to ignore. But let's look at the presidential election cycle, right? And this is the median performance. So if you can see it, then typically November, the market gets jitters, and then it's a smooth sailing after that for, I don't know how many years this is. And here is Goldman's forecast of the federal funds rate going down. Market's pricing in a much deeper forecast. Goldman's like, you guys are mad, right? Which I agree, by the way. I don't think that the slowdown, I mean, monetary easing is going to be so quick. I think it'll be slow. And then here is the median index returns following the first Fed cut. So S&P 500 mid, the S&P 400 returns 13%, which I've been telling you guys about. Russell 2000 returns 5%. SPX returns 10%. So it's always good to be diversified. And in case anyone's interested in knowing the potential impacts for corporate tax changes based on like the politics of it all, then the median potential hike scenario leaves a minus 8% tax or a gain 4%. And then I'm going to post this one as well. Here are all the election outcome scenarios and market implications. I'm not going to go through all of them, but I'll post them somewhere for you guys to read it. If you're not part of Discord, you should really be on that because I usually post it there. And then the last one that I wanted to bring to your attention was Prime Book. While we are at these highs, the Prime Book has seen the past 5 weeks of mostly selling. You can see that the black is 20-day net flow, the blue is 5-day net flow. And even though we've been seeing certain inflows on certain products here, right? Like financials are seeing a little bit of inflow. But apart from that, everything has been kind of flat or trading out. And hedge funds are short again. So this all sets up for a pretty nice squeeze if we can get one after FOMC. Till FOMC, I say conserve your capital. Don't do stupid things. This is not the time to speculate. Just keep it chill, right? There are times to speculate and then there are times not to speculate. This isn't time to speculate. You just hang out for a couple of days. Wait till things are more solid and then you can play out your playbook. But you should have something ready with your playbook because, you know, that's just the way you should be prepared. Anyhow, that's all I have for you guys today. If you have any tickers, put them in the chat right now. I'll wait a minute, see if anyone requires any breakdowns. If not, I'm going to end the stream here. I feel like today I went like a super bullet train. Apologies, but sometimes just need to get it all out in the open. If you're here and you're listening, if you can, drop a like on the video maybe. That would really help me. Help this channel grow, reach other traders that are also looking for ideas. Okay, SMCI. Super Micro. This one. The one that got completely obliterated. Okay, Roy, unfortunately, this falls in the scenario of a classic bubble. And my advice for bubbles in general, so when I say bubble, what does a bubble mean? It means you had stock prices just burst and go almost 10x, not 10x, but 5 to 10x, and then a huge, like, you know, just very steady unloading, and then a very deep sell-off. This is your like entire wick-off cycle in one picture. Accumulation, markup, distribution, markdown, right? And right now you are literally entering another accumulation phase. So you won't know when that accumulation phase is going to take off until you see higher highs, higher lows, and right here, you don't necessarily see that yet. So this could go further down. What is your thesis? Bearish, bullish? What are you looking at? Because it's I don't want to go through both scenarios with you. I think you got to look at it non-objectively, but I want to know what your bias is in order for me to help you. So what's your bias? Because for me, I would say very easy way to do this would be to first of all mark out your previous areas in which you had some range. This could be a strong one here, right? Bring it across on the weekly. Always start with your big time frames. So weekly, you have that, and then from there you can go into your daily, and then you have this, and then you're going to be having a specific area here and a specific area here, and this is going to be the box which you will be trading out of. In order for you to see a trend change here, one of two things have to happen. Either you break out and form a new demand space here in this area to bounce off from, or you altogether reject this area and then you come down hunting for liquidity in 382. So there's only one of two ways this goes. Just my opinion. To call this a short position right now is premature. I wouldn't do that. Because yes, the risk to reward ratio is nice and a gap down, but you need this to come back and retest another time on the 15-minute chart at the bare minimum. You need it to rally back up and retest to see that there are indeed more sellers sitting up here to add more pressure to your short trade. Right now, this could be a gap down and then a quick buy up and a breakout. What are you going to do if that happens? So you have to keep a very tight stop loss if you're taking a bearish trade. That's my honest opinion. Any others? Yeah, no problem, of course. Anyone else? Alrighty, I don't see anyone else. I will end the stream here and see you guys back on Wednesday. I hope you guys have a good trading day, and yeah, peace out.